Bitcoin forming a recovery here off the $107,000 price level. We already knew that this whole zone of support kind of stretching from 112, for me, honestly, down to about 98, 99 was going to be support. And we just picked a level right here, which, makes sense because the S&P 500 has not been bearish, right? I mean, Bitcoin has had all sorts of, kind of crazy shit going on with people thinking that, the bull market is over and we're seeing a cycle top and so on. And we've been seeing the sentiment throughout the whole market cycle. I think one of the things I really want you guys to understand, at least from my experience of doing this for over 8 years now, I've done multiple market cycles in crypto. You are going to get people throughout the entire bull market kind of doubting it and thinking that it's not legit. And that is okay, because what tends to happen is those people end up flipping bias toward the end of the bull market where everybody and their grandmother is bullish. And that's where you get a real kind of irrational exuberance, real euphoria across the market. And we're clearly not there. We're clearly in a phase right now where many people are still doubting the bull market, when in reality, I mean, look, here's the S&P 500, which we know Bitcoin is heavily based off of in terms of its, directional price, like its broad directional price movement. It is looking incredible. This has been a pretty aggressive rally, to be honest, since that Trump buy signal literally at the Pico bottom. But then more importantly from there, we are seeing as well a little bit of a slowdown happening right now, which is very much welcome in my opinion, given that, if you want to be able to continue trending up, you are going to need controlled kind of, continuation patterns, pauses in the trend and so on. So, with all of that in mind, I don't think it's, particularly surprising at all that Bitcoin managed to find support off this, kind of 107K level. Obviously, which level in particular between these two zones was always hard to tell. But we've picked one right here. Now, the problem is, we're in a downtrend, right? I mean, we're in a short-term downtrend. We started that downtrend up here at the all-time high. And ever since that downtrend started, if we take this onto the hourly time frame, we'll get a better view of this. We are clearly setting, kind of lower highs and lower lows throughout this market right now. And one of the things that I said to you guys when the price fell down here and then managed to get that subsequent bounce up over here is, this level could be a zone of resistance that we've got to watch for Bitcoin. And I think this is really important because it did turn into a kind of, support resistance flip essentially, where, for the longest time, this zone served as support for Bitcoin, maybe a little bit lower down to about, 116.5 or so. But generally speaking, this range between these two yellow lines, we knew was going to be an important level for the market. And I basically just came on here and I was like, hey guys, yeah, this could be resistance. We got to watch out for this. And that's exactly what ended up happening. Now, the problem is when we ended up getting rejected off this level, we plunged below this support level, which we also expected to happen. We then again flipped this zone, which was previously support, into resistance. Now, obviously, we kind of penetrated the zone a little bit. We didn't, fully get rejected right at the resistance level. Obviously, we got a little bit of a fake out. This level, draws out about 1% above the resistance level, the way I've drawn it. And for sure, you can drag this thing up a little bit if you want to, fit your bias a little bit. But the point is the same, which is that we found resistance the next time. And of course, that brings us to this next kind of resistance hit that we're at right now. We're finding resistance essentially in the same place that Bitcoin got rejected at before. And this has been a pretty, important level of support for Bitcoin going back to the beginning of August. Of course, we're now at the beginning of September. Time is flying. 2025 is approaching an end, which is crazy. And we are seeing for sure, that old zones of support are kind of flipping and becoming important levels of resistance that we should be watching out for. But this is not the only thing showing us support or resistance on this chart right now. Another key thing that I want to draw your attention over to is going to be the Ichimoku clouds here. So on the hourly, we've actually managed to break out of this resistance, but the hourly is not the best time frame for this indicator in my experience. The 4 hour, I think, is a lot more valuable, and this is a big, thick cloud. Okay, this is a very, very thick cloud, and I think it is potentially going to be presenting some problems for Bitcoin here, because even if Bitcoin can get, a breakout here, this entire range serves as resistance right now. And after we're done with this range of resistance, we have the real resistance up ahead, which is the resistance that triggered this, massive drop in the first place. And, to put it in perspective, it was a 7.4% drop in 3 days down to the low. It's been an 8.6% drop in just over a week. So it's definitely an important level of resistance that I'm going to, take seriously. And I think this is my point, right, is that there's a lot stacked up against Bitcoin right now on this chart. and that definitely makes the very short-term outlook look a little bit more bearish. As far as where that could take Bitcoin, we already know that our kind of support zone does stretch from 112 down to 99. Now, I know that this kind of thing can be annoying for people to hear, you know, like, what do you mean our support zone is literally, in this case, like a $14,000 wide range? That sounds ridiculous. And yeah, it kind of does sound ridiculous, but we've been here before. If you've been watching this channel over this bull market cycle, we've been covering this spectacularly well, honestly, quite incredible accuracy, of course. And we've said this before, where we are expecting very large zones of support for Bitcoin. Honestly, things that might not even make sense to people who want things to be very perfect and OCD and tightly wrapped up. Unfortunately, that's not how crypto markets work. Bitcoin is a very volatile asset, and as a result of being a very volatile asset, it prints very large ranges, and we really need to keep that in mind, right? You might not like the fact that it prints large ranges, but that doesn't really have any bearing on the market. So I think that's important because we can try and get more granular about, you know, where we might find support precisely, right? Like this zone looks like, you know, there's a ton of kind of consolidation and so on that's kind of happened over here. So this could definitely be a zone that the price is attracted to. But for the most part, I don't think anyone's guess is going to be particularly accurate here because it's just a blurry, mushy support zone. And so if this does turn into a rejection, anywhere in this range is fair play, in my opinion. People will get more scared the lower in this range we get, and I think this is where a lot of people really get tripped up because it's not scary. It's the same price range that Bitcoin was already in, and until we leave that price range, we're not actually kind of trending down. And we've already covered this, right? Like when you leave this price range, you got another beautiful zone of support all the way down to 91, 92. It's very hard to be bearish above these levels. I know that this is not what, you know, a lot of bulls want to hear because they're fucking impatient and they're gambling degenerates, but the fact of the matter is, as far as kind of macro price action goes, the low that Bitcoin set was here at 75k. There's another low over here, and I don't know if I want to call this a macro low, but it is at 98k, 99k. But for the most part, you know, this is the macro low. This is the macro low, right? This is another macro low. This is what macro lows look like. They're very clear to kind of point out on the chart, and we haven't printed one yet. So it looks like Bitcoin's trying to do that. But clearly, you know, every time Bitcoin gets a big drop and everybody and their grandmother becomes extremely bearish and says that we're hitting a market cycle top, Bitcoin cannot slide lower because the S&P is holding everything up. And I think this is, you know, a really, really interesting sign, you know, as far as these markets go, because if the S&P is postured to kind of move higher, and clearly it is, right? I mean, it's triggered a number of reversals over these last weeks. I mean, you know, let's take a look at this right here. So this reversal here took the S&P 500 down by 3.2%, this one down by 2%, and this one down by about 2.2% as well. And so that's a few reversals that we've seen since, you know, essentially the beginning of August, end of July. And that could be enough to kind of set the S&P 500 to continue going higher. I think the bottom line that it tells me is that I'm not really expecting it to do anything like this anymore. I would still like it to happen, and if it does happen, that would really line up with Bitcoin seeing, you know, the 98k or even 92k level. But as we can see from the S&P 500, that would have put the S&P 500 in a bearish place. And again, I think the main argument, which people don't even realize they're making because they're stupid, is that, you know, if Bitcoin ends up dropping massively, you know, it's going to enter a bear market on its own, and the S&P 500 might continue. Because it's very hard for anyone to say the S&P is in a bad place, right? I mean, you can have your macro Warren Buffett or Michael Burry style ideas of how, you know, we're going to see a massive depression like what happened a century ago. And that's kind of it, right? I mean, how many of those people are saying that, and how many of those people have had any fucking shred of evidence that they're even correct so far, right? I mean, there's definitely always going to be a large cohort of people that want to make claims about how the market is in a very weak position and how this is very bad. But, you know, until they start getting validated, they're just people that sound intelligent who are not making money. And we've been seeing that happen for the last couple of years. We do need to listen to these people. You know, if everybody faded Michael Burry, which they did in 08 or 07, even 06, then yeah, it's going to be something that they end up getting punished for. But at the same time, these people are always talking. And if you know, are willing to kind of sacrifice making any money in the name of saving money, then that's just going to appeal to different bankroll sizes, right? I mean, someone that's managing hundreds of millions of dollars, sure, they're going to be a little bit more cautious, but somebody that's managing $2,000 just wants to make some fucking money, and I don't think that attitudes is useful, frankly, for those people. But who knows? I'm certainly not your financial advisor, and you've got this beautiful disclaimer on screen with me telling you not to be an idiot, because that is a really, really important part of this. You need to use your common sense, do your own research, and keep in mind that I'm just a kid. What do I know? But yeah, I mean, if the S&P 500 does end up falling down here, which would be a pretty significant drop, the last time we saw a drop like this, and let's put this in perspective, we are talking about a kind of 5-6% drop. Last time we saw a drop like this was probably, this big drop right here. And obviously this was more of a 20% drop, so this was a lot bigger. If the S&P does end up doing this, it's just backtesting an all-time high from February of this year, which is really bullish. I think now is a really good time to do it, but of course we could get higher and then do it later. Of course, we only backtested the 2021 all-time high, years later. So it took a very, very long time for the market to kind of backtest that level there. So I think that is definitely telling us something about what might happen with the S&P 500. And again, if we do respect the idea that Bitcoin is kind of pegged to the S&P 500, especially on a large time frame directionally, then I don't really see how Bitcoin can enter a bear market when the S&P 500 is still looking good. That's ultimately my point. And I think this is really important because honestly, like if you came to me and you said, hey, Sammy, what do you think about, I don't know, this fucking meme coin that's been launched on Solana 5 months ago? Do you think that, it's going to go up? One of the first things I'd usually say, depending on the coin, is I'd be like, well, it depends on what Bitcoin's doing. Because if Bitcoin is looking sweet, if Bitcoin is looking healthy, then yeah, you're probably, you're probably going to have a chance for your coin to go up. But if the whole market's kind of trending down, and unless that coin has, a massive team that's literally just printing beautiful chart patterns on the chart, which is very common, but unless that's happening, then you're not really gonna, see much upside for that coin. And instead, what I'd say is you're analyzing the wrong pair, right? I mean, a lot of people, they get tunnel vision and they start analyzing super small coins and extrapolating that to the rest of the market. And it's silly, right? I mean, everybody understands that if you want to kind of invest in anything risky in crypto, you're going to have to look at what the safer crypto assets are doing in order to just judge, like, is this an environment where the market can go up? For a lot of people, this is common sense. A lot of people just straight up don't know this, but here you are. Now you do. But I'm making that case for Bitcoin versus the S&P 500. I'm here saying that Bitcoin is a heavily manipulated asset that kind of does move in its own way, but that it's still pegged to the S&P 500 for what it's going to be doing. And if the S&P 500's got really good posture even in a 6% drop, then how bad could Bitcoin get? All we're seeing here is essentially going to be, worst case, essentially a dominance reset where dominance could rise maybe as high as 61 or something like that, giving us really nice entries on altcoins once again, which totally makes sense. I mean, Ethereum against Bitcoin, for example, has hit this macro resistance zone. It would definitely make sense for Ethereum to kind of fall down into a range like this, and we're probably going to see some really nice fib levels that we can draw out as well if that does end up happening, to indicate to us that, so we got 0.5 here, 0.382, 618 down here, definitely indicating to us that there could be, some opportunities to grab these alts at cheaper levels. I know that right now, although this might seem a little bit hard to imagine, but of course, that's always how it looks before it actually happens. Our job here as analysts, traders, investors is to just stay prepared for these, kind of outcomes that could end up happening. We don't want to be caught off guard by this. That would be very, very bad. So we're definitely trying to make sure that we're kind of, keeping our heads screwed on that way, and making sure that we're, not getting caught off guard by things that, frankly, we were able to see coming. Now, as far as other altcoins go, here's Solana, still looking pretty good. It broke out of this range right here, and it's pretty much got a straight, easy run up to the 0.002 BTC per token level. Obviously, it's finding a little bit of resistance here, probably based off some of the resistance rejections that it got back in 2022 at this price range here, but I don't really think this is going to be much of a problem. If Bitcoin does end up clawing back its dominance, then obviously this is going to turn into a big fake out, and the and the Solana Bitcoin chart is probably going to drop back down into this range. But if that doesn't happen, it's still pointed up and it doesn't really have any significant resistance. Other coins like Cardano that I'm definitely definitely interested in are still just kind of slowly moving down, getting rejected off this level here, but it's got a really nice zone of support coming up right here at about 700 Satoshis flat, which is going to be really interesting to see if Cardano does end up returning down there, because again, I mean, if it fails this level, it's kind of dead, but if it doesn't fail this level, then, that's incredible support, right? And to be honest, we can drop, quite a bit lower than this without dying, but it would be, pretty bad if we do lose the 700 Satoshi level here, because a lot of these coins are in good posture right now, and if we lose that posture, that would be problematic. I don't want to go through all of the altcoins right now, but, just one more here. XRP now sitting at this support zone. This support zone has been tested many times, so this could be an indication of a little drop here. I think we're seeing mixed signals across the board, right? The reason I don't want to look at too many more coins is that broadly, these coins kind of are showing the same thing generally right now, so it's not something that you're going to see, a massively different chart on a different coin. They're all kind of telling us similar things, which is honestly mixed signals, right? Some coins are looking incredibly strong like Solana, others are looking like they might be due for a correction, and others are looking like they might actually collapse from here. So kind of a mixed bag right now, and that's all within a larger time frame context of essentially a very bullish market, right? I mean, this is still an incredibly bullish market. We have still risen from 74K to 124K within 4 months, or to 123K within 3 months. And we are now printing, after that, it was a 66% rally. We're now printing so far a 14% correction. So obviously, just as far as these, raw numbers go, we definitely, obviously, do not have any cause for concern. The only concern that you could possibly have right now would have to come from a very short-sighted outlook in the market, perhaps one that's very fear-driven, perhaps one that gets, kind of wiggled into somebody's mind purely because they're over-invested into the market. But I think, putting a very calm, more objective hat on to view this market is going to tell us that, yeah, we're up 66%, we're now correcting by a little bit, while the S&P 500 itself is in more of a sideways correctional range. So is it concerning that Bitcoin is dropping more than the S&P 500 right now? No. I think that a lot of people are drawing that conclusion and saying that, with Bitcoin in comparison to the S&P, it's not looking so great. Bitcoin's not showing as much strength. But, saying that also just completely ignores the fact that we're expecting harsher corrections on Bitcoin because it's fucking Bitcoin. It's not an index that represents some of the biggest companies globally. So I think that settles that quite easily. As far as Bitcoin dominance, just for another second here, if the market does continue to broadly look good, we might at best still see a move up here for Bitcoin dominance, but it does look like it's kind of trying to signal to us some sort of an alt season, whether that's a permanent alt season that effectively ends the bull market, or whether that's an alt season that is more of a mini alt season, kind of like the one we saw right after Trump got elected. That remains to be seen. What I will say is, obviously, we had that, kind of September rate drop narrative for interest rates, and we're expecting that news, if I'm not mistaken, around the 17th, which isn't exactly 2 weeks from the time of recording this. And that's going to be interesting to watch out for, because if that does end up becoming, a bearish event for the market, we could see a pretty big drop. At first, I said that this is going to be a buy the hype, sell the news situation, but that clearly didn't work out, and Bitcoin has kind of dropped in light of that, news where we're really expecting those rate cuts. So I don't really think there's a clear narrative to pull from this right now as it stands. I would have liked to see a very predictable rise up into that rate hike news and then a subsequent drop down. But the fact that we're correcting right now tells me that we might just shrug off that interest rate news like nothing really happened. And that is what we did the last time we saw a drop in interest rates. I want to show you that very quickly if we take a look at that here for the US interest rates, where when we got this big drop coming in here, it wasn't a massive drop, but it was a drop. We went from a base interest rate of 5.5 down to 4.5, and that took only a couple of months in 2024, in the second half of 2024. This was actually an incredibly bullish time for the market. If we look at it, especially on a macro scale, here's Bitcoin printed on top. Let's just make this extra clear so that we can really understand what we're seeing. And it was precisely when the rates dropped that we we really went crazy, right? I mean, we essentially went from $60,000 up to $103,000 across the same period of time that the rates were cut. So the figures are on screen. You can disagree with them if you want to, and that's cool. I know that a lot of people, are gonna do that, and that's your business. But we've seen what happens when rates cut. We've seen what happened last time when the rates were cut. Is it going to be different this time? Of course, that's what the bears want you to believe, and they should be right about that. I mean, in theory, that's how the markets tend to work. But the evidence not on the that's what the evidence is not on their side. That's the point that I'm making. Logically, sure, but I mean, we already understand that, if you're going to kind of stay stuck to your guns, stubborn in that sense, when the data across literally a 1 year time frame is proving you wrong, then I don't know. I mean, good luck. It could still be right. If you hold out with the right idea, eventually maybe you get paid. I know that's a very common philosophy. Me personally, I just kind of like to look at the evidence in front of me. I'm not so rigid in my beliefs in that sense. And if I can see that the data clearly tells me that in this case, rate drops are not bearish, and we're still in really good posture as far as these bull markets go, both for Bitcoin and the larger indices like the S&P 500, then I'm sorry, dude. I'm not worried about this. I'm hearing a lot of talk about the whole AI bubble as well. This is silly. The AI bubble narrative essentially springs from, slowing sales for Nvidia. Let's take a look at the Nvidia chart quickly. Basically suggesting that we're in a really, really bad place. And here's a trade that I was considering on Nvidia, but I did not take this, and I'm glad that I didn't. To be honest, I was going to wait for the Monday open to even consider taking this trade, because I drew this out over the last weekend. But come Monday open, I just didn't really have the appetite to go long on anything. Despite the fact that obviously I sound like I'm bullish, that doesn't mean that I need to be taking trades. Obviously, it's completely fine not to take a position. A lot of people don't understand this, and again, that is at their own peril. But obviously, this Nvidia sales slowing down thing is kind of scaring people a little bit. But look, guys, I mean, it's a stock chart. It's a speculative tech asset. You're going to see pullbacks. We can't act like there's a tragedy happening every time you get 110% move up with a fucking 9% down correction. I'm sorry, I won't jump on the bandwagon of making a big deal out of that. This bitch can drop by 20%, 30%, and it's still going to be in a bull market, and I think that's the reality that a lot of people don't really like facing. They want everything to be absolute black and white. It ain't like that. These are speculative tech assets. A 10% drop, consider yourself lucky. That's very, very light for such a massive run up. And this whole, graphics card sales slowing down narrative, signaling an AI bubble, or the fact that, GPT-5 wasn't such a big jump over GPT-4, Grok 3 kind of, not a huge jump up to Grok 4. All these ideas, miss the technical facts, which I'm not going to go into in this video, other than saying that, a lot of these LLMs are steps away from massive breakthroughs, but oftentimes in wrong directions. I believe Grok is the only LLM that's gone in the correct direction in terms of operating from first principles and then doing the general generative text thing that they all do. A lot of the other LLMs just spit out information based off their training data and the way that they were coded, but without that kind of first principles approach, which makes it a lot more scalable. And that's really important, because essentially, if Elon's right about this, which of course he probably is, because he's smarter than everyone else in the room on these subjects, then you're looking at a bunch of tech companies that have built in the wrong direction, with XAI building in the right direction. And what that means for AI in the future, I don't know, but I'm certainly guessing here and I think it's a fairly educated guess, that these other AI LLMs are going to have to really kind of change how they're operating. And again, when you look at this from the mindset of somebody that's investing or trading, you want to be in these markets before the good shit happens, not during or after. Because when you're in before, you're in while it's cheap, and then while these good things are developing and being released to the public, that's where hype builds up, and you don't want to buy it during that massive run-up. You want to buy before that happens. So this is something that really requires a lot of research, this whole AI bubble narrative, but I think it's very silly. Essentially, all we're seeing is people that are very used to extremely aggressive upward price action that are now scratching their heads as to why we're not up 20% for yet another month straight. That's a very, very silly outlook. It's very childish, quite frankly. That's not how markets work. You know, sometimes there are going to be pauses and corrections, and idiots are going to talk very loudly about how that's going to result in, you know, major catastrophic outcomes. But for the most part, the markets are just kind of, they're just chilling a little bit. And honestly, I think investors and traders would benefit from taking a similar kind of mindset in these markets as well. But there you go. A lot of things covered in this YouTube video. If you have enjoyed it, make sure you smash up those likes, subscribe, tick the bell, all that good stuff. You've got beautiful links to the best exchanges in the game linked in the description down below. I want to give a shout out to 𝗙𝐈𝗟𝗏, which is going to be linked somewhere around here in the description as well. Actually, I won't give that shout out right now. You can go ahead and check them out later because that link probably doesn't work. But check out these exchanges if you are interested, and of course, only if you're not from a restricted region. As for 𝗙𝐈𝗟𝗏, I'll tell you a little bit about them. Actually, it's basically an OTC partner, which I think a lot of you are going to be very interested in, especially if you're kind of dealing with larger volumes. I'll tell you more about them later on. We just need to get that link corrected there, but they are pretty interesting. And I've also personally used them as well, so I can attest that they work properly. But there you go, ladies and gents. Hope you've enjoyed this one. You know what to do if you have. Smash up those likes, subscribe to the bell, all that good stuff, and we'll see you all in the next one. Cheers.